Cars are becoming a hot spot again, okay? This interpretation note was done 22nd of March 2013. It comprises 23 pages and I'm going to give you the 10-minute summary, right? But you can read all these things. So the questions that I'm going to be giving you in terms of your verification point aspect all flow from these, okay? So it's very easy. That's why I put all this paperwork in place. And if you want the true answer, everything's C. Okay, no, I'm joking. But it's straightforward. I'm not here to test in that aspect. It depends if applicable or not. Right, firstly, why is a company car popular? So I'm the director of the company and I want to buy myself a Ferrari. Okay, maybe not a Ferrari because I won't fit in it. But I mean, the Ferrari costs $2 million, okay? So I'd rather than have the Ferrari go through the company as a company car. Why? Because my exposure is going to be 3.5% of the determined value. What's the determined value? That's a cost price less the finance charges plus the VAT. Because then the company effectively can claim all the expenses. That's the insurance, the repairs and maintenance, and all the rest of it. And if you do the sums, in most instances with a higher income earners with a higher valued cars, it is better to have a company car versus a travel allowance, right? Because of the limitations on the values at the end of the day. But what happens? As we said, nobody gets long service awards because nobody stays with the company long enough. So now the company, number one, doesn't want to buy the vehicle because a car is not an asset, as we all know. You drive it off the floor, you've lost your 14% VAT to start off with. Never mind going around the block and losing another 10%. The second aspect behind it is, I am not going to drive your pink Mini when I replace you at your company that you had as a company car. So that means I want a new car. So you've got your Avis fleet of cars behind you over here now because nobody wants them. So what they do is they approach entities at the end of the day to do leases. Now you get different kinds of leases, a full maintenance lease or a normal lease, and then we get a new little thing called an operating lease. Okay, and I want to show you the distinctions between these. So basically what happens is the company goes out and says, fine, we're going to lease these vehicles from the company, from a finance house or whatever it is. Great, not a problem. How is it treated from a perks tax perspective? Easy, the determined value of the car when you got it, 3.5% of that, which is the cost price plus VAT less any finance charges at the end of the day. So you can determine what that amount is, that it becomes the taxable perk. But what happens is if one of your staff members or somebody that you have brought in, let's say the individuals from Cape Town, and you've brought them up to Joburg and they have to spend 4 months here effectively working on a project. Now they didn't bring their car because they flew up and they're going to fly back, so you have to supply them with a vehicle for that 4-month period to drive around and get to the different sites. So who would you go to? You're certainly not going to go get a full maintenance lease for 4 months. Nobody's going to entertain that. You'll go to Avis or similar. Why? Because they basically will rent you a vehicle on a 30-day basis and you have to bring it back. So after that period, that's the cheapest cost because no other leasing agent will give you a car for 4 months. So you're all following. But how did you tax it? Because you can't use the determined value because today I'm driving a Yaris, tomorrow I'm driving an Ethos, tomorrow I'm driving this. There's no value. What is the value attached? So they amended from the 1st of March 2013, they amended the Act to say where you have an operating lease. An operating lease is defined in section 23 capital A, which says to us if you are a person that hires out assets in a context of normally to the general public for periods normally less than 30 days, that is effectively seen as an operating lease, which Avis tick the box will fall in, because any of us with a driver's license can go along and hire an Avis car, and normally for periods less than 30 days. Now for the tax treatment of those specific vehicles, you will take the full rental value. So in other words, if I'm paying $4,000 for the car for the month, plus the insurance, plus the fuel and everything else, and it adds up to 6,000 Rand, that 6,000 Rand becomes our use of motor vehicle taxable portion. Obviously, 80% of that or 20%. Are you all following that? Now that amendment was brought in the 1st of March 2013 because prior you couldn't actually work out what the determined value was because it didn't make provision for it. Do you have company cars? Does it affect you? Okay, now back to company cars. What is a pool car? A pool car is a vehicle which is generally available to all staff and it stays on the premises of the company after business hours. What happened when that funny little goud train came into effect? Because I don't know why everybody working in Joburg stays in Pretoria and everybody working in Pretoria stays in Joburg. Have you noticed that? Okay. Because it doesn't matter in the morning if you're going north or south, there's still the same amount of cars. So there's obviously something in that line. Now, I have had companies come to me saying, yes, okay, now we want to do, because the Gautrain is great, it'll stop by our office in Sandton, so I can come from Pretoria, but what happens if I have an appointment? So let us get a pool car for execs, which isn't the small little bakkie with the painted windows and the frosted things. It is now a little Merc or a Beamer standing there. Is that seen as a pool car? Your answer is no. It is not available for general use by all staff. It is only for general use by all execs. So it doesn't, sorry? But not all staff. You see, what? Yes, they are still staff, but they're not all the staff. Okay, and that's what the Act is, and that's a technicality, but effectively what it means is that SARS has the right to turn around, which they've been doing now, and saying, sorry, your Merc or your Beamer for exec staff only is not available for general usage by all staff, thereby meaning it becomes a taxable perk. How do we calculate a taxable perk? We take the 3.5% of the determined value divided by all the execs and say, thank you very much, here's your tax payable. Okay, so please, if that is the case, it's not seen as a pool car. There's also new amendments coming in, and we don't know them, we don't have the finality on them yet, where they are looking at the motor industry trade. You know, when the guys get company cars, there's a big difference between what their cost price is and what retail price is on those vehicles. There's now discussion and talk where they want to effectively create a situation where it's not going to be the cost price for those specific entities, they're going to be doing it on retail value. So there's a big uproar about that currently, but it hasn't gone through. There hasn't been anything. I haven't seen anything on that yet. But that's the discussion aspect in place.
I heard they're looking at implementing something next year.
It's all in up in the air, but we don't have the final details. But as I said, that's as far as. But that does create a problem once again for their perspective in the industry trade. Okay. Then the next thing is, what is a tool of trade vehicle? A tool of trade vehicle is where an individual is required to be on standby, in other words 24/7 or after business hours at the end of the day. And that vehicle is specifically designed for that specific purpose at the end. So that's where you find the bakkies with all the equipment on, and the guy takes it home because he's on 24-hour standby and the rest. Is that a taxable perk? The answer is no. But what is the audit risk that you have? The first thing SARS asks is, when they come to do an audit, they say, can I please have the leave records of the people that have tool of trade vehicles? Okay, now can you please give me, he's gone on leave, I see, thank you. Can you please give me the petrol card for the period that the individual's been on leave? And if there's usage on that petrol card during the time that person's on leave, it constitutes a company car. Why? Because it's got to be retained on the premises and he's not allowed to use it for personal use. So when you see all the little N3 toll gates on the petrol card while the guy's gone fishing in July in his company bakkie, sorry, it is now no longer a tool of trade, it effectively is a company car. There's a myth in the market space that a single cab bakkie is always seen as a tool of trade. It's not at all a true statement. I just heard that the other day. Okay. Any questions on those? You're more than welcome to go through the rest if it affects you, but as I said, on the whole, that's the nutshell summary of what we're dealing with in terms of those changes. Yes?
Because I don't know whether some of the people are doing it. For directors, reducing their loan with the value of use of company car. The value, and they will reduce their loan to the company.
They reduce the value of their loan.
They reduce their loan to the company.
Okay.
Yeah, with the value of the car. For an example, the value, when they use the company car, calculate the value, then they will put it in their loan to reduce the loan. They will say the company, they are reducing the loan that they give.
Oh, okay.
It's not money, it's value. So they do that.
But
they are not taxed on the value, then they will put it in their loan account.
So they're trying to disguise the company car as a loan repayment.
Exactly.
But then they're claiming all the expenses for the car.
No, it's a company car.
Yeah, but I mean they're claiming the tires and petrol and all that. Okay. So the question, well, it wasn't a question; it was a statement, I think. That what has been found in the market space is that company directors that have loan accounts owed to them by the companies are effectively taking the value of that perks tax component, the valuation in terms of determined value, and actually reducing their loan account with that amount, not creating. So in other words, the company is repaying their loan by giving them the use of the specific car, right? Now, obviously, that creates some concern in the aspect because the creation of the right of use of motor vehicle is for the private usage. Now, what happens to the business component? Because what is going to happen is I don't have too much of a problem with that initial line entry, but then the individual is still going to have a petrol card, maintenance, still going to have insurance at the end of the day, which the company is then paying for. Now, that automatically is not going to be seen as the amount that is effectively being paid as the loan repayment at the end of the day. I would go as far as saying that my attack on that would be that in fact it constitutes a fringe benefit. You following what because that's you settling the insurance, the petrol and the rest. Now, in normal circumstances, you're either going to pay tax on the value, determined value, which you're not doing. You're showing it as a loan repayment. So that's a separate transaction. Now, I, as a company, are paying your insurance, your petrol, and I'm paying your maintenance. So strictly speaking, that should fall within Section 8.1 and be seen as a travelling allowance. That would be my initial argument. Think about it. Let me know. Okay. So we work both sides of the coin. Right, next one. Our next interpretation note that came out. Oh, let's upset the people. No. All right. This was issued on the 26th of February 2014. All right, now I know the industry that most of you are in, and it's not going to affect you, but it's good to know from a client perspective if you have clients. All right, so what happens here is this is a taxation of tips. So we all have our local hangout that we like to go to. We have our favorite restaurants. We like going to casinos. We like doing that. We all have our spots. Now what happens is when you're sitting at your favorite local and the waiter or waitress comes over to you and says, thank you very much, here's your bill. This is what you consumed at the end of the day. And you decide to give them a tip. If that tip is in cash and you give it directly to the waiter or waitress, is there an employer-employee relationship? Certainly not between you and that individual. There can never be an employer-employee relationship unless you're the owner of the place, but then you're not going to give them a tip. What happens though is there an employer-employee relationship between the owner and the individual receiving the cash? Yes, there is, but the cash is being given directly to the individual. So there is no employer-employee relationship between the owner and the individual in that tip aspect. Are you following? You agree? What happens if I pay by card? Then it goes into the bank account of the owner. And then the owner will give the cash to the waiter or waitress. Is that a taxable remuneration component? The answer is no. They are seen, in terms of this interpretation note, as being independent, which is really a big argument for me, because where are they working? On your premises. Is there control and supervision? Yes, because they decide what shifts you're going to work. So how could they be independent? But in terms of this interpretation note, they say in those cases the waiter or waitresses are going to be seen as independent. Okay. However, if we have a pooling arrangement, now this happens in a lot of the restaurants and pubs and things like that, where today you're going to be running. You know what running is? That's a person who runs behind and picks up all the plates and all that. So you're not going to serve anybody. You're going to be serving, you're going to be playing behind the bar. Okay? So what happens is the two tip allocations will actually go to the two waitresses. The barman's going to get nothing, because all he's doing is assisting you to get the drinks for the table. So he's not getting a tip, and you as a runner are not getting a tip. Okay, that's today. Tomorrow, you, the waitress, you running, you know what I'm saying. So they rotate those cycles. And what they say is at the end of the week, however much tips we have made, we will split it between the five of us. As soon as that happens, there's an automatic employer-employee relationship in place, and you are required to deduct PAYE and account for UIF and STL on those amounts. Because the boss has got a control aspect. Right, now does this make sense to you? Now you really want to find the curveball here, okay? Over and above that, so you're either going to have a PAYE or STL and UIF problem, or you're not. But over and above that, every single waiter or waitress that earns more than 20,000 Rand in a 12-month cycle is required to register for provisional tax. Even if they earn below the threshold. Why? Because the provisions of the fourth schedule says any income that you receive that is non-employment related that exceeds 20,000 Rand per annum, you are required to register for provisional tax. So can you imagine that poor student sitting at Wits in the morning, working in the afternoons, earning more, and 20 grand a year in tips is nothing, eh? Divided by the amount of, especially depending on where you're working. I mean, I had one question posed to me in December through LinkedIn, asking one of the groupiers got a 50,000 buck tip from one of the punters. I don't know how much punting the individual did as well or how much money they made, but he gave them 50 grand and they want to know if it was taxable or not. In terms of this, no. And even before this was, because this is February and that question was raised in December, there is no taxability because there's no control from the owner. That 50 grand comes in, goes straight out to the individual. But now, where is our risk? Because obviously this is now what they're putting into effect. Does the owner of that specific restaurant, pub or casino have a risk situation with regards to SARS and their waiters and waitresses? The answer is yes. Because SARS can walk into your establishment and say, fine, what is your setup here? How do you control the tip allocation? If you're working on a basis saying, well, whatever tips the individual receives, it gets back to that specific individual, then in terms of this, you are independent and there's no employer-employee relationship. There's no PAYE, STL or UIF. However, what's the next question SARS is going to say? Can I please have all the tax numbers of all your waitresses and waiters, plus how much you have paid them in tips for the year? And if you can't prove that, they can classify that as income in your hands. Correct? There's a whole bunch of things that can be done in that process. So, and you know, most of these guys don't care that the students come in or they're working vacation and then all of a sudden they go off again because they don't feel like working again because they don't need the money, they've had the party, they've been to H2O, they've done, you know what I'm talking about. There's no consistency in waiters and waitresses unless they're making a living out of it at the end of the day, and those are few and far between. Okay, so if you do have clients or anything like that, please go through this thing and make sure they're aware that this is a potential new audit parameter from a SARS perspective to ensure that these parties are tax registered and all the rest.
How, sorry, the being registered for income tax is not an issue. If somebody's earning a salary from you, whether it be £5 an hour or whatever it is, they need to be registered for income tax, technically speaking. So that's not an issue. But how, if they're not monitoring, if they're not requiring the owner to monitor how many tips are getting paid to their employee, then how can they then ask that question?
Yep. The question posed is, the first one, that's not an issue. The question posed is, if we are not required in terms of the Act, or if the individual is not required to actually control how much money you're taking as tips because they're independent in that aspect, how can SARS ask the question as to whether or not how much money is being received by those individuals? And the answer to that is, in terms of Section 40 and Section 41 of the Tax Administration Act, SARS has the right to ask any third party any information they require about that party. So in other words, SARS can turn around and say, please, the cash might be an issue, but everything that's gone through the system, at the end of the day, through the banking system, and bearing in mind, most entities pay by card. So if SARS asks you to provide that information that you have got on your record disposal, you are obliged to hand that over.
But that you'd keep track of anyway, because most of them have their own matching numbers.
Yeah, but bearing in mind, not all of them do. I mean, some of the oldest pubs here in Joburg, there is no way they keep record like that. It's written down once a week on the thing and saying, here's your tips, thank you very much, it's gone. It's not a wage register and things like that and all the rest. They do have that for the people that earn a salary, but not for the guys that are exclusively on tips. Because of the fact that the guys come and go like they want to. So you could have the risk exposure. Now that's what I'm referring to. I always look at the worst case scenario and where you need to prove to SARS what it is. Because then the flip side of that is, if you don't have proof, let me give you a curveball. If you don't have proof of who you gave the tips to, then I suggest from a SARS perspective that you took the tips. Prove the contrary. You know, so you're in a very awkward situation when it comes to that. But obviously with the interpretation note coming out, it tells us that there is the new avenue where the guys are going to be starting to do audit. So if we have the potential risk, we need to identify and tell the parties that are involved.
And this is only to really wage transfer. What about taxi drivers?